Hey everyone, welcome back to Corporate Decoder. Today we're diving into Balance Labs, a company that promises to help startups find their footing. But judging from their annual report, it seems like Balance Labs might need a little help balancing its own books. Let's see if we can decode what's really going on. We're focusing on their most recent 10K filing, which covers the financial year of 2024. A 10K is basically the company telling the Securities and Exchange Commission, the SEC, everything important that happened financially over the last year. This is where we get to see the real numbers, not just the promises. First, let's talk about the things that could go wrong. Every company lists out potential problems they face. It's called risk factors. Balance Labs is pretty upfront, starting with the big one. That's right, Balance Labs says directly that without more money coming in, they could go out of business. This isn't just a generic warning, it is in bold. Startup businesses often struggle with funding, but it's not a good sign to have it so clearly spelled out. It gets worse, their own accountants have substantial doubt about Balance Labs' ability to continue as a going concern. That's accountant speak, for they are not sure Balance Labs can stay afloat. It basically means the auditors are uncertain about the company's future. If they do get more money, it could make things worse for current investors. Issuing new stock can make existing shares worth less. It is called dilution. This essentially means your slice of the pie gets smaller. One more red flag, they mentioned being subject to penny stock rules. These are special regulations for stocks trading under $5 and are intended to protect inexperienced investors from very risky investments. Not where you want your company to be. So what do their financials actually look like? To understand that, we have to scroll down to the middle of the document where they talk about the market for their stock, which is traded on the OTC Pink market. The OTC Pink is kind of like the Wild West of stock markets. It's very risky and not many people trade on it. Now for the numbers that really matter. Their net loss, which is what a company has after all its expenses are paid, was over $528,000. That's compared to about $308 the previous year, meaning they are losing more money now than they used to. It is not a good trend. General and administrative expenses actually decreased, going from about $35,000 to $13,000. But professional fees, which include things like lawyers and accountants, jumped from $25,000 to $71,000. You don't want expenses to go up that much year over year, but you don't want expenses to be too low either, because it can indicate that the company is cutting corners on important things. One, Amber, and also they took a hit on some investments, losing over $25,000, and they recorded almost $232,000 in interest expense. It's just one thing after another here. Looking at the balance sheet, which lists out everything a company owns and owes, we see a sharp drop in cash. Cash went from roughly $112,000 to just about $13,000. They have a working capital deficiency of over $5 million. That means they owe way more money than they have readily available. It's like being underwater on your mortgage, only for a business. They're burning through cash using over $157,000 in operating activities. In general, you want the money coming in to be higher than what goes out. Remember earlier the accountant's going concern statement? Now it is really setting in why that's a big deal. Their accumulated deficit, which is the total of all their losses over time, is now almost $6 million. That's a deep hole to dig themselves out of. The most important thing for a business is that it does not run out of money, so it is important to keep an eye on the statement of cash flows, which shows the movement of money both in and out of the company. Unfortunately, the total cash has gone down significantly during the year, indicating they spent a lot more than they received. Their revenue section shows that there was zero revenue recorded for both this year and the previous year, highlighting the revenue struggles of Balance Labs. The report also goes through standard accounting procedures, and it is important to disclose them, but unfortunately they are not all that insightful for figuring out where the company is going wrong. In a section on loans, they mention a loan they made to another company that is fully reserved against. What that really means is that they don't expect to ever get the money back. The related party transaction section is always worth paying attention to. This is where the company discloses any deals they have with insiders like executives or major shareholders. Balance Lab says their CEO gets paid $10,000 a month and had not received any payments as of the time of this report. It is not a good start when the person in charge is not getting paid and that money owed is mounting as debt. I hope he is motivated by something other than money. They have a number of debts with related parties which have not been paid, so that is a major item in these financials. In the section of the filing concerning their commitments and contingencies, they disclose their consulting fees. So we already talked about the consulting fees earlier with their compensation, and there is nothing else to discuss here. The rest of the document is the schedule of effective income tax and further discussion on items we already saw. So let us jump into our conclusion. Balance Labs financials paint a pretty clear picture. This is a company struggling to stay alive. Revenue is practically non-existent. Losses are piling up and they are burning through cash quickly. The risk factors are not just boilerplate legal speak, they really mean it. While some businesses might find this appealing based on the financial numbers of company, it is unlikely that Balance Labs will be helping them anytime soon. The biggest red flag is definitely the auditor's going concern opinion. That, combined with the repeated need for additional funding and growing debt, makes this a very risky situation. Right now, it's hard to see a clear path forward for Balance Labs without some major changes. Proceed with extreme caution because the balancing act here looks very shaky. Thanks for watching. If you found this corporate breakdown helpful, give us a like, drop a comment, and definitely subscribe for more deep dives into the world of finance.